right, welcome to the Nadex Application and Strategy Webinar Series. This is a webinar hosted by Nadex.com and presented by myself. My name is Daryl Martin. I'm a trader just like you. My website's ApexInvesting.com, and I do a daily radio show that you can get live market commentary. You can actually feed it feeds right into our website as well. And we have a lot of other services. We have hundreds of hours of education you can check out. I'll be showing you where to get access to a lot of the free tools and education that we offer here in just a moment, okay? Before we start with anything, we always got to start with the disclosures. So, obviously trading everything involves risk. Make sure you know what you're doing before you do it, okay? And obviously this is information that is proprietary by Apex Investing and all that. Futures, options, swaps, etc., they all involve risk. They may not be suitable for every investor. They may result in financial loss. Any decision you make is your decision. Again, sort of just a reinforcement of you make your own decisions. Be empowered to make your decisions. And the other thing is, one thing just to point out to you, you won't see on here you can lose more than what's in your account because every trade on Nadex is fully collateralized, meaning the full risk on both sides, the buyer and the seller, are put up on every trade. And so every trade is fully collateralized. Therefore, you cannot lose more than what's in your account because you won't get a margin call because you put up the full risk. Okay, so nobody will ever say, hey, you owe money. And so that's probably one of my favorite things about Nadex. I don't ever have to worry about some crazy thing happening and it blowing out my account. The only way that I'm going to do that is if I put up too much risk. I don't know what I'm doing, too much size, overtrade, but I'm not going to blow it out because the market moves really far against me on a contract, okay? On a single contract. You know what your risk is up front. Want to make sure you know, hop on Nadex.com. This is where you get your live and your demo account. Okay, so right over here on Nadex.com, I'll show you where the links are. And this step you should do right now. So, those of you who said, 10% said I don't have a demo yet, this is a step you should do this very second because you can have it done in 30 seconds, okay? And let's go to trading. And then go to Demo Trading Account, right there. And fill in that form. Come up with the username, first name, last name, phone number, email address. Fill that in and get that going. So there's a direct link for you to that. Check your email right away, and you'll be able to log in and access your demo account. I did a whole thing today on my radio show where I was literally just hammering why you need to trade demo, how demo helps you, how demo helps you learn. Obviously, you want to get out of demo as fast as possible because you want to, make money, but you want to survive. So you want to make sure that you are trading correctly, wisely. You know the platform, you have your system down, you know how to react to different conditions, you know how to enter a trade, exit a trade, push the buttons, and that you can do your system on autopilot. You can be very, very disciplined. So it's a great tool to have. And not just for the initial couple weeks they give you, but even ongoing. Once you have a live one, it's good to test, get those little squirrely ideas, And somebody post an idea, trade, whatever, you want to go take it. That's the place to take it, okay? Not your live. So protect your money. So don't just take something randomly because somebody says take it. Know what's behind it and what you're going to do. MSNBC or whatever. And then the other thing is, if you want to get that demo extended. Some of you may have had a demo expire. If you create a live account, you can fund it with $20,000, or you can fund it with $500, whatever you want to do, or $100. Minimum requirement is $100. If you make, I don't care if you trade 100 contracts for $50 risk, or one contract for $3 risk, or if you get in a trade and get out of a trade, if you place a trade on Nadex on a live account, you can call Nadex right down here at the bottom. They have their phone number, and they will extend out your demo for a year. Okay, and a lot of you already have live. Maybe you don't even have your demo anymore. Maybe you want a demo to try some things in. So that's the way. Just give them a call. If you've already placed a live trade, call them. If you haven't yet, you need to get that extended. That's the quick way to do it. In, out, done. But of course, obviously, you want to get the live trading as soon as you can, but just not too soon. Let's make sure you do have a little bit of an idea of what's going on, because otherwise you get in there and you get all these ideas, and you're going to be rich tomorrow, and you place the wrong trades. And we'll talk about how to understand the price at the binary to make sure you know what you're doing. Next thing, ApexInvesting.com. So we're a Nadex educator. So And there's all sorts of random stuff out there. Check out the Nadex. They host their webinars. They post them all on their website. They have a lot of great resources on their website and on their YouTube channel. So you can go over here under education, okay, and find out who their approved educators are, and then where they allow them to do webinars. And that's what they approve. That's the extent. They don't approve anything beyond that. And then you can also go to youtube.com, /Nadex, and right there they have all sorts of education that you can take advantage of. And we have a whole strategy series on here. There's a lot of stuff on here that you can take advantage of. So I just want to show you where this education's at. But another great place for education is just right inside of our website. This is stuff as I've grown as a trader, as I've developed, as I've worked with other traders. We have hundreds, we have thousands. I think we have 5,000 something traders now inside Apex. And let's see, 6,000. Okay, we have about 6,000 traders. But you can log in over here. Okay, so click on this, you get free access, and you can log in. It doesn't cost you anything. And like I said, I have the radio show you can listen into. You can check out the archives. They're uploaded. Usually with about 24 hours, the archives are uploaded. We're going to work on getting podcast actually streaming in there now. If you're brand new to Nadex, about 10% of you were. Again, hopefully you've already requested that demo account so you can follow along. But if you're brand new, check out the Nadex tutorial videos. We walk you through stuff step by step, getting started with Nadex, Nadex platform tutorials, Nadex spreads, Nadex binaries. So just A, B, C, D, okay? And that's a good place just to get you going. Now, one thing I want to go ahead and caution you on, because I'm learning this as I'm learning how to educate too, because I'm a trader and I'm learning how to educate everybody, is don't feel like you have to master everything before you do anything. Okay, pick something, focus on it, make sure you get it systematic, and grow from there. We'll help you with that. If you want to know where to start, ask us. We can say, hey, this is what we think is the simplest, But, make sure that, you focus. Don't try to, master, I talk about straddles and strangles and ratios and butterflies and iron condors and iron pterodactyls and, long and short. And, I go into all these different hedges and all this different stuff. You don't need to know all of them. Okay, it's good to build your playbook as you go, but you need to master one thing, get it down, it's working for you, and then keep going. And then also, one of the biggest things is this forum right here. So you can go right here to the trading question forum. It's also under questions, trading question forum. If you have a personal question that's not a trading question about any product or whatever, you can always come over here to the ticket. But trading question forum, and our information's over here as well. Contact information if you ever need to call us. But trading question forum right here, this is the biggest thing. This is where we're big about traders helping traders, okay? So traders are constantly putting in, mistakes they've made, things they learned, questions they got. Just about strategies and systems and money management and psychology and, reviewing their trades. And so it's just an ongoing growing database of just Q&A and comments and lessons from traders. So there's a lot of value here, but the great thing is you can hop in and you could just post a general trading form. If you don't know where to post a thread, post a question. Any question you got, we'll be glad to help you out, okay? And as you dig in, you'll start sort of figuring out where to post. We'll move your post for you. Don't worry about that, but you just hit post a new thread and ask your question, okay? Like I said, we'll be glad to help you on that. And a couple other things we have. Not only do we have all the videos, and we have our webinars that we do. We also do Thursday webinars every Thursday morning. But also we have live Nadex binary and spread scanners and education on those. So right here under Nadex binary scanner, then you can go in here and you'll be able to see. There's a lot of stuff that you can take advantage of with that. Okay? So I just want to let you know where you can go to get information so you continue to grow, and where you can also go to get this recording is under bonus webinars. I think 3, it may be 4 now, who knows. But right here is where we're going to be posting this video for you. Okay? So hopefully everybody's able to see the webpage. I got somebody saying they can't see the webpage. Is everybody good? And every once in a while somebody may have an individual thing, but if you can just verify for me real quick. Okay, so you're all good. All right. So you may want to call GoToWebinar support to get you going on that, and I'll actually post a link for you to help you out with that. Give me 1 second. Here you go. Have this ready to go just in case somebody has an issue. Right there. In case you need any help. So if you have any problems, just call that number. I'd literally call them right now because they have a thing, are you live in a webinar now? Yes. You click the button and they connect you and they help you out. Okay? All right. So, anyways, we'll keep on going, but that's where to get, some information and the tools and what we call the deviation levels, which are really helpful. And there's more than I can go over right now, but I just want to let you know where resources are located. Okay? So now let's get on to it. We're going to talk about breaking down the binary, the price of the binary. What is a binary, right? So, what actually makes up the price of a binary contract? Like, it's price 0 to 100. That doesn't completely make sense. And I want to help you understand where that price comes from. Because if you understand where that price comes from, and I don't mean like getting all mathematical algorithm. I mean, I could go into a whole bunch of fun math for you, but it's not really going to help you. What I want to do is I want to give you practical information where you really understand like what the whole concept is. And let me see here. I'm going to ask somebody something real quick to give me something, screenshot I want, because it's going to really help you. There we go. Okay. All right, so they're looking for that for me real quick, because like I said, I just want to make this as simple as I can as I go through it. And so there's 4 factors that influence a binary's price. That's the first thing you want to know. Okay? Well, what are those 4 factors? We'll go into those in just a moment. We're going to talk about, like incorporating binaries into your trading system. Okay, so how do you do that? Because maybe you're a futures trader, forex trader, stock trader. Maybe you're an options trader. You like to do credit spreads, things like that. So what do you do? What kind of trader are you? And how do we help you incorporate this? Maybe you've never traded a day in your life, and you're like, I'm just trying to figure out what's going on. So we can help you out with that too, easily. All right, I actually found the screenshot, so that's good. So the factors to consider, we also want to talk about what do we want to consider, because when you understand what the 4 factors are that influence the price, then you'll understand the factors to consider when you choose a binary and understand how the price changes, and that will help you a lot in your strategies. So the first thing I want to do is, now some of you are option traders, so I'm going to go into an example here in a second. Some of you are not option traders at all. But the first thing I want to do is I want to give you just what are those 4 factors. Okay? It's really simple. It's really time to expiration. Okay? It's the strike price's proximity to the underlying. And I'll go through these a little more in detail after I just list them off. Something called implied volatility, which is the expected movement built into an options price. Okay? And other traders. One thing about Nadex is you can make your own market. You can put a bid or offer inside the bid-offer spread. Okay? You can impact the binary price. Now, it's going to move. So if you put it inside there, it's still going to move regardless. But, somebody can come in on a bid, someone can come in on an offer, and they can meet that offer. Or there may be other traders out there just with limit standing. There can be several levels deep. There can be market makers on the other side. Nadex is an exchange. They're not on the other side of the trade. They're there to facilitate the transaction, the transaction between the buyer and the seller. Okay? And so they're independent of the market maker or the other traders. And their goal is to give you transparency in pricing, meaning you can see what the pricing is with the ability to see or have anonymity. So transparency meaning you can see the pricing, you can see the the depth, but also anonymity meaning the other traders don't know who you are. They don't know if you're getting in, getting out, winning, losing, that type of thing. So profitable, not profitable, etc. They don't. When you're getting in at 10, they don't know if you're taking profit because you sold at 80 or you're buying at 10 because you think the thing's going up. They have no idea, and that's the benefit of trading on an exchange. When you do trade on exchange, that is how the pricing is actually going to be based on a price model, a true price model like this. Okay, and it's going to use things like implied volatility. Do you have to go through and pull it out and understand it all and everything else? No, because you're not really going to be able to impact it. Okay, but you'll start understanding why prices are different at certain times of day, certain times of night, before certain news events, why things change when you understand the 4 things that are impacting them. Other thing, just like in each exchange, they have time and sales reports and all that, so you can actually go and you can pull that right off here off their website. It's very helpful. And again, they have a lot of links on there. Check those out. But you can see the transactions that are happening, and they update that so that way you can just look and see what's going on. But so there's a lot of cool stuff you can get access to. But time to expiration. So let's just tackle that one. That one's really, really simple. Okay? And the easiest way I can show this is to bring up the binary scanner, because it makes it where I can load a bunch of different binaries on the same page. And so let me get that set up for you real quick, and then I'm going to bring it up, and then I'm going to pull up some contrasting comparisons to just let you see how time, which is one thing people usually don't notice, impacts the price of a binary. And after I get done with going through these 4 steps, I'm going to show you some little tips and tricks on binary pricing and what they are similar to and how they work. So just hang in there, and we'll keep going. So, all right, let me get this up and running. Okay, that's what I wanted. Okay, so right here on the scanner, and dragging this up now so you can see it. Okay. Again, this is a product that we make. By the way, it is free. Okay, so you can use the scanner for free. Just log into ApexInvesting as a free member. And I'm just going to reset all my filters. I can choose live or demo. Okay, for placing trades. I can actually place my trades as long as I'm logged into my Nadex account. But so we'll choose demo because we're just messing around right now. And once I do that, sorry, I'm logged into my demo. Not logged into it all the time here. Oh yeah, I'm in. Okay. So anyway, so we got all the pricing going on, all these markets. I mean, there's a ton of binaries, and that's just the 3 indices right now that are open, and then Russell will open in a little bit. We're going to go here. We're going to focus on FX. Okay, now because it's at night. All right, and several of the pairs have binaries that expire pretty much every hour. So like 7 p.m. to pretty much 5 p.m. like almost every day. And if you want a binary expiration schedule, there's 2 resources. One of them is right here under the scanner. We have Nadex contract, Nadex rollover, binary expiration schedule. There you go. So if you go to binary expiration schedule, we actually have that list, and it shows you every expiration on every contract. Well, at night, what you can see is almost every hour we got right here. We have, actually, and that's not an hour, that's a 125 because of the decay. We have US yen, euro dollar, pound dollar, and Aussie dollar have expirations at 7, 8, 9, all the way basically until 5 o'clock the next day. Okay? And they're adding euro yen next week. So that'll be coming out next Sunday. Pretty exciting. So they're as they keep growing, they keep adding more contracts. Other resource, I put a bunch of, if you want to see these, I need to start posting these over on Apex, but under Benzinga.com, I post a whole bunch of articles each week under binary options. So I just posted an article last week, what hours can they be traded? So, but so you can go and you can follow me there and get access to all those as well. Okay? But, anyways, so back on the binary scanner and back on time to expiration. And we're going to choose what markets. We can choose the Aussie, the Euro, the Pound, and the Yen. Okay, and we're going to get rid of everything else. I'm going to reset our filters. Okay? The filters basically say what I don't want to see. You don't know what you don't want to see yet until you see it. So after you see it, you're going to start learning what you don't want to see. So don't worry about the filters from day one. You can come back to them. Okay? And let's see if we can find something that's lining up really well for us across multiple binary expirations. I'm going to see if I can get the yen to line up. A lot of times it has some of the closer ones. It's a little bit easier. Let's see here. It's moving so much already. All right, well, we'll grab those 40s right here at least. I'd like to get something even a little better than that. We're going to get the markets moving. Let's go with the pound. See if we can find something that's maybe a little better on that. And 64, 98, 93. That's pretty close. Okay, 64, 93, 64, 80. I think it's about as close as we're going to get, somewhere around there. And then 64, 80. Interesting. Okay. So, looking at all the strikes, looking at everything that's set up and how it works, you can go in and you can see like how the price changes. So we got 95, we have 72, we have 38. So notice how the price gets smaller and smaller. Okay, and that's, like I said, it's not a perfect example. I'm sorry, let me find one more example maybe for you. Because I want to get just a really clean example so there's just no doubt. Like you completely understand why. Let's see here, 6480. This 6480, we got this. Okay, now there it's lining up. Yeah, I was trying to figure out exactly, and that's sort of a little bit skewed. 6480. And okay, we lost 64. Okay, so we have 6480 like at 3 o'clock. It's really interesting. I'm sorry, like I'm seeing like this whole big dynamic, but I'm like it's way too complex to go through. But let me see if I can find it. I'm just trying to find a perfect example. 3840. That would be good if we can get a bunch of 3840s. 3840, 3840. Okay, that's good. Because if we can get those, we can get the ones above them too, because they'll all be lined up. All right, right here, we're not going to see just a massive difference. See, it's like $51, $52, $51.50, $51.50. Now here it's $48.50. Okay, so just a quick Q&A question for you. Who can tell me why this is only $48 or $50? Why is the strike? This is part of that understanding, breaking down the price of the binary. Why is the strike only $50? Why does it cost $50? It's at the money. Excellent, Greg. Perfect. Yeah. So the reason it costs $50, it's at the money. So one of the first things I want you to learn is whether there are 7 hours till expiration, or 11 hours till expiration, okay? Or 15 hours till expiration, or 19 hours till expiration. Or if we go down here, if we can even find one, I mean, that's pretty close. It's not quite there. But even, I don't care if there's 3 days until expiration. We can go up here. If there's 3 hours, if we go up here, we find the at the money. That's about as close as we're going to get. But if it's at the money, at the market, okay, and here's what I mean by at the money. I mean the market, let me open the ticket up, is trading basically at the same price or close to the same price as the strike. So like the market's right here at 38.39 versus 38.40. If the underlying market, the euro dollar, the S&P, gold, whatever, if its price is the same as the binary, then it's going to be worth $50. And it doesn't matter how much time has passed. Okay? So if I bought one a week out, 3 days out, 3 hours out, or 15 minutes out, if it's at the underlying, it's going to be right at $50. Now there'll be a little bid-ask spread in there, a few bucks on each side, and it's, people try to make a big deal out of it. I'm like, it's an option. It's a derivative market. It's going to have a bid-ask spread. And you know what? It should not matter if you are trading correctly. So it literally doesn't impact us. So, but I just want you to understand that basic concept. So everybody get that whole thing of, doesn't matter how long it is, it'll be basically $50 right at expiration. We got that? Good? Okay? So time till expiration does not affect at the money contracts. Now, that does not mean that if I buy this, it's going to stay at $50. It means as long as the market stays at 38.40, it's going to stay at $50. Okay? What that also means is if I buy any contract on here and the market moves to that strike, what is it going to be worth? Okay, so if the market right now is at 38.40 and it moves down to 3,700, what will this strike be worth? I can sell it right now for $97 for $3 risk. What would it be worth for me? The market went from 38.40 down to 3,700. Who can tell me exactly what that strike would be worth? Now, I'm not talking about expiration. I'm talking about anywhere between now and expiration. Yeah, Dan, it will be at the money, correct? It'll be worth $50. Okay? So do you think that might help you understanding that out of everything you can understand about binaries, everybody gets that, they're 0 at expiration or they're 100 at expiration. If you don't get that, definitely go watch that basic binary videos on our site. But I can sell at 97 and buy back at 50. I can buy at 50 and I can sell at 97, whatever. But do you think that might help you in take profit goal? Like maybe you're targeting a price on a chart? Could that potentially be a good thing to know? What will it be worth if it hits that price? So yeah, there we go. All right, I'm going to make y'all work a little bit. Y'all got to type. If I'm asking it over and over again, I'm waiting on some responders here. So we got plenty of people on. And I want to make sure you learn. I don't just want this to be some webinar you just sit through and forget. I want, be dynamic. So if I sell it at 97 and the market goes down to 3,700, then I could assume I could buy it back at 50. So if I go up here, let me just top on my demo real quick. Okay. And if I put a sell, now this is demo, and I would not do this trade, what I'm telling you to do right now. And you'll know why in a little bit, okay? Don't do this trade. It's a bad idea. But I want to do it just to, like I said, give you an example of how it works. If I sold this for $97, then right there it's at 97, and I hit place order, okay? So place my order, boom, sold, done, order received. In my field, I can check in Nadex. I can also check in the trade tracker up here. Sold one for 97. Okay, current price, there's a dash. Let me answer real quick. Why is there a dash there? Why do I not have any P&L? Why didn't it say what I'm down or up? Like, why isn't there an ask price? Who can tell me why there's not an ask price being quoted? Yeah, it's so deep in the money that it's already like above it. But why is there no quote? These are good questions, Rick. I don't know. Okay, here's the reason. Remember what we talked about? There's bid-ask spread. Okay. Well, what is the bid-ask spread on here? It's about $5, $6. Okay, it depends on the contract. Well, a binary can only be priced at 100. Correctly, that's the highest price a binary can be priced at. On the offer is $100. So if a binary can only be priced at 100, and you add, say, $5 to that, so we'd have to buy for like 102. You think anybody's going to buy from you for that bid-ask spread at 102? That's a guaranteed $2 loss for them. Okay, or $2 profit, I guess, depending on how you look at it. But anyway, so if the bid-ask spread would put it higher than 100 or lower than 0, there's not going to be a quote. But as soon as it does come inside of it, like right here, $99.50, boom, you got a quote. Okay? So I just want you to understand that, because you're like, why is there no quote? There seems to be no liquidity. It's like, well, this thing is like so far out of the money, it's ridiculous. Okay? Like, the chance of this thing hitting is less than 3%. Okay? Like, you have like a 1%er trade going on here. All right? And I can pull up the whole probability curve and show you why that's just the worst idea in the world to do that trade. But why is there no offer quote? Just because there is no offer, because the offer would be higher than $100. Is that simple enough? Does that make sense? If you put the bid offer spread in there, the difference between where you buy and you sell, if you added that on, it'd be above 100. So, okay. So these are little bitty things that if you understand them, then you don't have these questions just nagging you in the back of your mind. Okay, so if I know that I could sell at 97, like we did up here, and if I really believe the market was going to go down to 3,700, there's obviously a lot better binaries I could choose, and we're going to keep going back to this example just to make it consistent. I could buy back at 50, right? Now, there's a bid-offer spread. So like looking at about $5-6. So let's just assume 6. That puts us at 53. Okay, so I'll add that into my pricing, because if you understand, again, this is part breaking down the binary. Part of the binary is understand there's a bid-offer spread. That's why there's no quote on one side. That's also why I need to put in 53. Now, if it keeps going below 3,700, yeah, I'll get filled at 50. Okay, but if it gets like right to 3,700, I may or may not get filled at 50. It sort of depends upon the oscillation there. Okay. Now, I have a rule, but I've seen a lot of people try to steal it, make it their own, but whatever. It's real simple. It's, what if it gets to like 37.03? I mean, you were so right. You were $3. You're up like, I don't know, 1,200% or something ridiculous on this trade, okay? And then you lose it all because it didn't hit your take profit because you were off by like 3 ticks. So I use a rule called 5743, where a lot of times I'll go in and what I'll do is if I sell an out of the money binary, I'll buy it back at 57. If I buy an out of the money binary, I'll buy it back at 43 to basically account for the bid-ask spread, like $3 on each side, like 53 by 47. And then I'll add, about $3-4 to that, because I would rather not make $3 in additional profit than lose all that profit I made. It's like, yeah, I know my risk is $3, but if I'm up like, $40 on the trade, that's $40 of my money. That's real money. So if I close it, I get to keep it. So I don't just want to throw it out the window just because I want $1 more. Okay? And then I hit place order. So I buy it. Now, remember, it's really simple on sells. Sells are simple. Okay? First, let's make sure you understand buys. I buy lower and I sell higher. Everybody gets that, right? I buy at 10, I sell at 50, I make money. Sell, I buy higher and I sell lower. So if I sell at 50, I buy back at 20. Okay? And it's in a stock trader's mind, that's called short selling. But we're not short selling, we're not short anything. But it's sort of like if you went out and you sold it and then you have to deliver it. Okay, or you have to go buy the stuff to make it, or think of it like an advanced order. Okay, I put in the sell first, like I sold the product to the person, but now I have to go make the widget. Okay, and I know my goal is to make sure I make that widget for less than what I sold the widget for. But I got to make the widget after. Okay, so versus go buying the widget and then selling it for a higher price, what I'm going to do is I'm going to go sell the widget first, get the capital in my hand so I can go, buy the pizzas, make the widget, and then I sold it for 70, I bought it for 20, I delivered it, hey, I made a profit, So sell high, buy low, sell high. All right? All right, so I just want to help you out in understanding like the selling and the buying concept. I want to help make sure you understand the at-the-money concept. I think we got that. I think you understand the bid-ask spread concept or bid-offer spread. So question, so are you saying that as you get close to the money, it will not fill sometimes? This is why you do 53.47. Did I say that right? It's actually 57.43. Okay. 53.47 would be I guess 47 by 53 if you're doing bid offer. So 47 by 53 is the bid offer. I mean, just look at any of the, if you can find a direct at the money. See if I was like right at it. There'll be there's $6 in between, really between 44 and 50. There's $6. So expect that if the price of the binary is worth 50 when it's right at it, that this will be at $53. That will be at 47. Okay, so that's why I do that, because it would have to go a little bit below it to bring the price down. Like right now, I bet we're a little bit below my guess. I mean, I'm not even looking at the price, but just look at the binary price. I can usually tell you the underlying market's price. I've been doing it long enough, but yeah, we're at 38.36, 38.37 rounded, okay? So we're like 3 ticks below, and we're at 50.50 right now because of the bid-offer spread. So that's why I do the 47 by 53. The reason I do the 43 by 57 rule is because what if it gets to like a couple ticks away from my strike and I don't get filled? So this isn't for bid-ask spread. This is to give me it may not always exactly hit my target price, okay? Obviously it won't. But what really burns is like when you lose by like a tick, okay? Like it gets right up there, doesn't quite hit your take profit because it doesn't quite get to the market by that price, and then it drops. So 43.57 has worked very, very well for me. I know a lot of other traders that use it. Can you repeat the buy high, sell low? Okay. Don't buy high, sell low. That's the wrong way to do it. That's backwards. Okay? You always want to sell for more than you buy for. Like, that's a consistent rule. Doesn't matter whether you're going short or long. You always want to sell for more than you buy for. Think about this in anything in life. If you buy something, when you buy a house, you want to sell it for more than you bought it for. Right? Otherwise, you're losing money. Okay? So, ideally, when you buy a car, you can sell it for more. If you buy jewelry, maybe one day you can sell it for more. Okay? So, things that appreciate in value. Buy land, you can sell it for more. You want to always sell for more. So, you always want to buy lower, sell higher. Once you have that down, you're going to invert it. I'm going to sell higher and I can buy lower. So I can sell first and buy second. I could go here and I could sell at $43 and I could buy it back at $5. Okay? That's if the market goes down. So if I sold it and the market dropped. Okay? Or here's another way to put it. An easier way just to make it a little more. Remember I said any market that goes down to the strike will be worth it. So if I sell this at $78.50, because I know the short side gets people confused sometimes. If I sell this at $78.50, I know it'll be worth basically $50, right? So $53 with that spread, okay? So I can sell at $78.50 now, and I can buy back at, like say, 53 or 57 later. And I can buy back at 5 or 10 if I want to. It's just good practices in binary trading. You don't hold all the way till expiration. That's, you know, a rookie binary trader when they hold to expiration. Okay? It's one of the telltale signs that somebody doesn't know what they're doing. If you see anybody doing that, they don't know what they're doing. Okay? Meaning, like, if you see a bunch of settlements, you know, if like somebody's like, oh man, I got a payout. I mean, I do have trades that go to expiration, but not by choice. Meaning, like, I didn't get my price filled, it wasn't right there. You know, like, not because that's what I want. It's either they're greedy or they're, you know, which is, we've all faced that as traders, be it myself included, okay, or ignorant, and myself included, okay. I had to learn that lesson. But like I said, you know someone is new if they are holding to expiration all the time. You should always be setting a take profit on your trades. Okay? So, like up here, what I did is I said, hey, I think the market's going to go down to, 57. So I pop it up, and I sold it at 97. I'm making this up, okay? I'm not really trading this. This is a demo trade. By the way, one thing to let you know, I think this is just a good lesson. If I can find out which of the 1,000 tabs I have open. See, most of these are all tickets here. Hold on one second. Let me go. Ticket. I'm going to log out back in if I need to. I just got to find it for you. I got a lot of Chrome tabs open, but I want to show you this because this is, I think, really important so you understand it as a trader, and if you're ever looking at, results from anybody or whatever, is you can go in, and if I log in, it's going to kick me out. I'm going to log in twice. And keep posting your trade, or keep posting your question. I'm not ignoring your question. We're getting to it, okay? I don't keep posting it, but, don't think I'm ignoring your question. And then let me log in on this one. And again, if you followed me, I have nothing wrong with trading in demo. I trade demo. I started off telling you, hey, trading demo. But I want you to know what's real and what's not. And then let me get this one last one open for you. Okay, so first thing I want you to notice about this is sorry, it keeps recycling here. Okay, that was a long pause. Got that one down. Okay, first thing I want you to notice, look at the color. Okay, see the color of the screen? it's dark blue. That's a live account. Okay? You can also tell by looking at the URL. It doesn't have the word demo in it. Okay? Right up here, that's a demo account. Why does it think it's in Spanish? Anyways, so see how it says demo, and notice how it's a different blue color. This is how you can tell the difference between the two. So, also the strikes vary. They can be different. So I had some traders asking about, I don't know, I had a lot of traders asking about that this week, about strikes being different. And a lot of times like on NASDAQ, let's see, like that's one of the most popular ones I'll see them be a little bit different on. Now, the trades work the same, but obviously the results could vary a little bit. It looks like they're all lined up today, I think. So yeah. So every once in a while, though, they'll be different. Okay? So they can be different. Live and demo are not always the same. And demo has other traders on it. You can place trades on it. You know, I can affect the demo market with my fake money, you know. So it's just not the same. It's good for learning how to trade. It's good for following your system. It's, you know, 95% of the time it's going to be great. But every once in a while, you know, you have a trader doing some random thing. And again, strikes can vary a little bit. Okay? I just want y'all to make sure you know the difference between demo and live. Okay, so do you have down the short, sell higher, buy lower? Is that clear? I'm hoping that's clear. Because I know as a new trader, like that can really be like overwhelming, confusing. Like some of you are like, we got it down, move on. Okay, if you don't, hop on my website. I have short videos, and the place to start learning in the website. Okay, because I don't want to leave any of you guys hanging out there. Let's see, right up here under education. Nadex trading resources. Nadex getting started, platform, and then if you binaries, just go to binaries. Okay, so like 1, 2, 3, and ask right here in the forum. Where do you think I should start? Two people will tell you. Okay, but as far as like just like what is a binary, what is a spread, what is Nadex, how does the platform work? Right there, start there. Okay. Okay, so everybody's got down how the money's work. You can sell higher, buy lower, buy lower, sell higher, all that. You can place working orders. You can do all sorts of fun stuff. But now let's get past the at the monies, okay? And let's start talking about the impact of time on premium. So now let's look at right here. And I do at the monies first because time doesn't really affect them. They'll always be at that price. Okay, so I'm trying to select the same strikes all the way down. So that way we can look at it. Alright, so right here, we got the 38.60 strike on euro dollar. 19 hours from now, 33 bucks. 15 hours from now, 32.50. Was there a big change in the price? 1 hour, if the euro dollar stayed flat, did not move for the next 4 hours, was there much of a change in the price? So what was the difference? Who can do the math? Who can tell me what the difference is between 34 and 33? Get your gold star. Okay, there you go. Good job, Mike. So yeah, not close at all, $1. So do you see how the binary only changed price by $1 between, this is what he's saying, because these both started 23 hours previous to expiration, okay? So all daily Forex binary contracts, and there's intraday, daily, and weekly, okay? All daily binary Forex contracts started 23 hours previous to expiration. So this shows you right here that 4 hours is literally only making like $1 or $2 difference, okay? Now, right here, we're going to go from 15 to 11. That's 4 more hours. But look at what happens. Now we're going to go 32.50 to 27.50. So we had like a $1 or $2 difference. Now how big of a difference do we have? On the exact same strike, this one has 15 hours to expiration. This strike has 11 hours till expiration. What's the difference between 27 and 32.50? And I don't know, can y'all see it? Is it too small? So if it is, I can a little more visible there. So we got $5. So 32.50, 27, basically $5. Okay. So we had $1 or $2 difference. The longer away from expiration, and then we had like $5. Okay, on this trade right here, and that's about 20 ticks out of the money. I wonder if we got a weekly up here. Yeah, it's just not gonna help us out too much. But do you see that, like the binary price? So if you're out of the money, there's sort of a nice advantage there. It doesn't decay quickly. Okay, if you're in the money, it doesn't decay fast, so it's not doing you any good to pick what's called a premium collection in the money binary. Okay, we'll talk a little bit more about strategies at the end here. So right here, 27 to 16. Now we've doubled the rate. So basically, almost every 4 hours here, we're doubling the rate as we get closer and closer. Now we're at 26.50 to 16. Exact same strike. This one has 11 hours. This one has 7 hours. 4 hours later, now it's a $10 difference. Okay, here, $5 difference. Here, like $1 difference. So we're like almost doubling how fast the time is decaying out of the binary. Okay, and then we're gonna go from like 15 to 5, basically about the same rate of decay, which is interesting, right? So we didn't really make much more decay between 7 and 3, like the 4 hours, than we did in the next 4 hours. So about $10. Now we do make 20 over the course of all 8. But it didn't burn much faster. So it's sort of like it doubled, and then it sort of slowed down. And then it'll, it's only going to get so cheap. Okay, it can only go down so much. That's the main reason it didn't, it seems to have slowed down. I guess that'd be a better way to put it. It looks like, oh, well, it's not decaying as fast. Well, it can't really get much cheaper than 5. It can get down to 3. Okay? So do you see the effect of time? Exact same strike in relation to where the market is. The market is at like 38.40. Okay, this strike is 20 ticks out of the money. With only 3 hours to go, 20 ticks out of the money. Maybe a little more than that right now. 37. So what do we got? 40. We have 23 ticks out of the money. $5. Okay, but with 4 more hours, it costs 15. With 8 more hours, the thing's going to cost, or up to 11 hours, I guess. We'll say put it a different way. With 3 hours to go, $5. With 7 hours to go, 15. With 11 hours to go, 26. With 15 hours to go, 31.50. Why is it getting more expensive as it's further out in time? Yep, we got some good answers. I'm going to let a few people answer. Yeah, so why does it get more expensive? So the word is time value, which you're correct, but what do you mean by time value? More time to be right, also more time to be wrong. It goes both ways, okay? So there's more time for it to move, right? That's really the bottom line, is there's more time for it to move. Remember I said, one of the things we're talking about a little bit is an implied volatility. Implied volatility is expected move. Okay? Well, one of the factors, implied volatility, that affects is time. Because the more time you have before something expires, the more time there is for that market to move. Not only do we have the Asian session, but we're also going to go into the Euro and British London session, and we're going to go into the U.S. session. Okay? And then we're going down to the end of basically the U.S. trading day. So 3 o'clock is when the futures Forex trading pits close. So more time, more markets, more news can come out. Therefore, it costs more money. If it only has a few hours or a few minutes till expiration, there's not as much movement that can happen. Unless there's news. We'll talk about that. But so understand, it will get cheaper and cheaper and cheaper in value. It'll cost you less and less and less. That's because they think there's less of a chance of it moving. The binary price itself, though not 100%, okay, is very reflective. I mean, very reflective. I've done several binary case studies on this. Very reflective of probability. Okay, of what? Not of touching, okay, but of expiring in the money. So if I buy a $5 binary, what is my probability that it will actually be above that price at expiration? Yeah, 95. Yeah. So, 95 that it'll expire in the money or out of the money? Which one? Good job, Anthony. You got it? So, okay, so there's a 5%. If I buy it, there's a 5% probability. There you go. So 5% probability that it'll actually be a profitable trade. If I hold it. This is one of the big things that I try to let people know. Just because you see the big payout doesn't mean it's a good idea. Remember when I said I saw that $97 trade and I said it's a horrible idea? Because it was a horrible idea. The probability was extremely low. Okay? I better have a really good reason besides I want to make a lot of money for that to happen. So, $5, 95% probability it's going to lose if I hold to expiration. Now, do I have to hold to expiration on Nadex? Or can I get out early? No, you don't have to hold. You can get out early. Okay? So, that's another big thing to think about. Can I get out early? Okay? So, and don't think just because it's more expensive that the probability, when I saw one person said, hey, that gives the edge to the other side of the trade. You know, and they're not, no, it's too expensive. You can be on either side. You can be the buyer or seller. Remember, if you got the premium, that's great, but you also, it decays really slow. Okay? If you got the out of the money, it decays slow, which is good, but it also is going to move a little slower. Okay? So, anyway, so we got that right there. So now what I'm going to do, that we've done that, that's time to expiration. So now also, to make sure you get the flip side on that, the sell side, 97% would be probability that it's not going to expire in the money. Okay? So like 5% that it will on a buy, okay, with the number. It's like sort of representative of probability. It's probability that it will expire in the money. It's probability that it won't expire in the money. Now I'm going to do a really, really simple math thing for you, okay? I know some of you are like, oh no, I'm going to use a calculator, okay? And by the way, I highly recommend. I use calculators all the time. If you watch my radio show, you'll see like sometimes I'll have like 20 calculators on the screen at one time. If I buy a $70 contract, okay, then I have. If I buy a $70 contract, how often theoretically should it expire in the money? How often? If I buy a $70 priced contract, how often should it expire in the money? Like if I bought it, how should it expire above that price? 70% of the time. If I buy a $70 binary, how much do I make on that trade? What's my max profit if I hold it to expiration? Not accounting for fees, which add up too. Okay, so $30 minus fees. Perfect. Okay, so I'd make $30. Okay, and then make it. Let's say out of 100 times, I make $30 70 times. $2,100. That is awesome. And I won 7 out of 10. I rock. Okay? And then, if I'm going to potentially be profitable 7 out of 10 times, that means I'm going to, what? 3 out of 10 times. Lose. Okay? So, how much will I lose if I buy a $70 binary? If it loses. Worst case. $70. Okay? 30 times out of 100, right? So 30 times I lose times 30. Gotta like that. That's even better, right? You can get the calculator to mess up for you. I don't know why, because it's not doing the minus 30 there. Minus 30. Minus 70 times 30. So, how much do I make if I buy $70 binaries and I hold them to expiration? What do I make? If I did 100 trades and they're all just randomly at $70, what should I expect? What does that equal? 3,000 would be awesome. I don't know how you get that math, but that'd be great. Nothing. I should expect to lose. So, break even, at best, right? So, and then I had 100 trades times $1.80 in fees. And then, not $1.80, sorry, that's not fair. I had 70 times $1.80. This is saying you're doing one contract, Okay, you can get your fees down by trading more. When you get to 10, they cap out, so it's really cool. But if and then I had 30 times 0.9, because if they settle out of the money, I don't pay a fee on the exit, on the settlement. Okay, so 27 plus 126. So best case, if I always got filled at 70 and I held them and they, the stats worked right out, I'd lose $153. Okay? Or if there weren't fees and somehow I got away with that, best case is I'm breaking even. Do you see why you can't just buy and hold to expiration at a certain price? Okay? You have to take profit because they'll go up to 70 to 95 and come back down. I've seen it happen many a times, all the way from 95 to 0 after I bought the thing at 40. Okay, I learned to take it the hard way. Okay, and get that profit right there. Also, you don't have to take the total loss. Just because my max risk is 70 doesn't mean I should be holding on to it until it goes all the way to 0. I don't buy a stock and wait for it to go to 0. You don't need to buy a binary and wait for it to go to 0. Okay. You don't buy, most people don't trade options and hold them to expiration. So, I know there's a lot of bucket shop stuff out there and that's all they let you do. But that's betting. We're talking about trading. Okay, so we're going to trade the binary. And if somebody's telling you to buy and hold to expiration, they're telling you to bet. I'm talking about trading. So let's trade. Let's put probabilities in our favor because I just proved to you, based on how the probability of a pricing of a binary works, if you just do that, you won't make money. So, because what will happen is, I don't care how good your win ratio is, eventually it will catch up. Okay? And you just got to have those pieces together. You don't know what that's going to come through, so you got to have risk management in there. You got to take profit. Just some little things, but that's understanding how the price of a binary works. Okay? It's probability, time to expiration. How is it going to go faster or slower? Okay? Now, with that, what I'm going to show you, and this is pretty cool, something we have on here that you can take advantage of is you can go on and you can use a simulator. You can say, what would happen if the market went up or down, let's just say 20 pips. Okay? Hit apply. And then what it'll do is it'll tell you, now this is absent of time. We're actually going to be adding in a time feature and an IV feature and all that. But just one of the other steps over here, remember we talked about time till expiration? Check. Okay? Now let's talk about strike proximity to underlying. Okay? We already talked about other traders. Traders can trade inside the bid-ask spread. We talked about implied volatility, how that's reflected in time. I'll touch on it again right after this. So on proximity to underlying over here, watch what happens. See, this says, hey, if it moved, we said, and you can, by the way, you can always reset this. Okay? So we got 20, make it 20 from where it's at right now. Okay? So the market moves up or down 20 pips, what will happen to the price? And so this one right here, this 38.60 will go from $5 to $27. This one will go from 13 to 35. Well, that one goes to 35. That one goes to 27. Which one's a better trade? If you really think it's going to hit it like in the next couple hours, which one's a better trade for you? The 5 or the 13 one? Because this one's going to go all the way up to 35.50. This is only going to go to 27. How do you know which one's the best binary to choose? Well, let's look at what it would make if it moved. I'm going to say we think it's going to move fast. News, whatever, our indicators are really good at timing the market, whatever. Check this out. It'll go to 26. That means it makes $21 on a $5 risk. This makes $23 on a $12.50 risk. This one makes about 188% return, buying at $12.50, selling at $36. This one makes a 450% return, buying at $5, selling at $27. This is the better binary to trade. Also, notice it goes faster. Okay, let's go a little bit further back. 24 to 40, 50. Okay, 30 to 42. Okay, so the binary moves slower in price the longer there is till expiration. And that's why a lot of people come to me and, we're going to do a webinar on weeklies. We're going to dive into them. But what I will tell you, the problem with weeklies is they move slow. So maybe that's the benefit too. That's what we're going to work on exploring them. But they move slow. And I'm almost like, why would I wait 4 days to make what I can make in 40 minutes? But right there, I mean, see how it only, 38% return, 67% return, 180% return. Now it's 117% return. So, because you buy it at $3, $5, now it's back at $4.10. A lot more, it moves a lot faster. Okay? Now also, remember, it's decaying faster. So it increases in value faster as the market moves, but it also decays faster. Now, remember when I said earlier, like, this was like the worst idea ever, like you should not buy this contract. Now I selected, I don't know what it was. I selected the 3700, the 3 a.m. Okay? Let me show you why that was a wretched idea real quick. So 3700, 3 a.m. There's several reasons why this is a bad idea. But one of them is a very simple fact that there's a whole bunch of other $97 ones right above it. Okay? So why would I sell a strike for a $3 risk at 3,700 when I could sell a strike for a $3 risk at 3,780? I know it seems really simple, but you'd be amazed, right? I mean, does the euro dollar right now trading at somewhere around 38, 30, okay? 38, 35. What's it going to get to first? 3,780 or 3,700? What's the first price it's going to hit if it goes down? Yeah, 3,780. So you want the closer one, okay? If you're out of the money, right? So you want the closer one. So there's no reason you'd ever sell any of these. Like, they're all the same risk, all the same reward, and they all have. And that first one is reflective of probability. After that, do you think maybe it sort of just diminishes? They're just making a market, okay? So if you want to donate $3 to some market maker, you go ahead. But I'm not into donations on the market makers. Plenty of other things you can donate money to besides that. So don't choose those strikes way out there. There's no benefit. Okay, some other traders, I'll see other traders too, like randomly put stuff in. I'm just like, really? And probably one of the biggest lessons I can teach you right here, probably one of the most important things you'll learn on setting take profits and stuff like that. Do you see, let's say if I buy this contract for 5, and I've seen multiple traders make this error. Do you think I can sell it for $99 or $98? No, I cannot. All right, now could somebody theoretically fill me? Yeah. But why would I do that? Okay? Don't put in a order to buy for 25 cents and sell for, 99 and stuff like that. Yeah, you can put it in there, and if you want to, go to town. I'm just saying, in reality, look at the prices on the binary price ladder, okay? And make sure you're choosing one that actually exists. Now, my personal thing that I like to do is, what I found is I like to choose the next best to the worst, okay, or next best to the best, however you want to put it. But let's say like it's 97 to 94.50. Well, that's a 20 strike difference on that. Like, it has to move 20 more pips for $3 more. Okay, not worth it. I would rather take price at 94.50. Okay, right here, look at this, 5 and 3. Okay, like if I was selling at 94 and trying to buy back at 5 or whatever, selling at 50 and buying back at 5, whatever you're doing. It'd have to move 20 more pips. And this is more what comes into play if you're like a premium collector. Like we do a lot of things called boomerang trades all the time. And, I'm selling like at 20, maybe I'm selling this at 37 right here. What price should I be looking to buy back at? Okay? I should be looking right here at the binary price ladder. I should be going, in 20 pips in the euro dollar, I can buy this thing back at 13.50. Regardless, now if time goes down, of course it can be cheaper. But without time, 13.50. It'd take 40 pips for me to buy this thing back at 5. Okay? It takes 60. And the reason I'm saying 20, 40, 60 is because they're 20 wide. 900, 880, 860. Okay? The euro dollar have to move 60 pips for me to buy this thing back at 3. Like, so if the market has moved down like 30 pips, I still am not going to get the $3 fill. Definitely not going to get the $2 or $1 fill or quarter fill or whatever. So, look at real prices and go, is it worth the other, maybe go, it's worth the other $8 to me. I'm going to go for 5. Okay. Is it worth another, $2 for you to go for another 20 pips? Probably not. Okay? Up to you. So that's why like the second to worst is usually that's where I start. Okay? So I see like 97, 94, 94, and then I see 3.5. Okay. And that's where I'm going to start looking for what price I want to take it at. And I may go, do I want to take it even sooner? What's the next one? It's a lot faster way to get out versus just waiting. Man, this thing's never going to get to $5. That's right, because it's going to take 20 more ticks to get there. Or, I have my take profit at 96. Well, that's right. Just check it out. 96 is somewhere between here and here. That's another 10, 20 ticks you're waiting on. Just take the thing at 94. Okay? So, that's probably one of the most powerful lessons I can teach you right there. It's just looking at the price ladder to get a realistic exit price and making the determination, is it worth it? Now, as time goes by, the price will change, okay? And I could potentially adjust it. But as of right now, the market moves real quick and I want to get out. I can use that to help me. So we got that at the money. We have that next to worst or next to best, however you want to phrase it, like 3 to 5, 97 to 94.50. Like target prices that will help us. We also can use a simulator to help us see what the price will be worth, okay, when the market moves. And it's just reading the binary price ladder and using the binary formula to calculate that. So very, very simple, but very, very helpful tips on that, okay? And so you have in the money, at the money, out of the money. So your out of the money is going to be your lower risk, like less than $50 basically, okay? And so on either side. Your at the money is your right at the market, okay? And then you got your in the money, which is your higher than $50 risk. So this was like $61 risk. It's 92, and that's really not the definition. The definition technically of an in the money contract is if I'm buying, the strike is already greater than where the market is trading. If I'm selling, the strike is already at or less than where the market's trading. And I have a whole in the money, at the money, out of the money video to help you wrap your mind around that. But the cool thing is, like on these, I do them all the time. I don't like doing them for $85. I usually do them for about 60. This is more of my style right here. But $60 trade, I can make $40. I can get out if it goes against me, okay, with about a $10 or $20 risk, right? Because I know it's going to be right at 50, okay? And so if I sold it at 60, sold it at 40, I could buy it back maybe at 57, so that's got a $27 risk, okay? But if the market stays flat, if the market goes down, even if the market goes up some, I can still be profitable in the trade. Probabilities are in my favor. There's a 40% probability that this will expire in the money, okay? 40% probability it won't expire in the money, meaning 60% probability it will expire in the money because I sold it for 40. And I'm not going to hold it to in the money, okay? I'm just like, hey, if probabilities are already that it's going to expire that way, why don't I trade it that way and get out sooner? Where am I going to get out? Here or here? Okay? So I'm going to sell it for, this price and buy it back. Now, say here, it's sort of funny because it goes backwards, right? So you actually have to look over here, like here or here. So I'm going to sell for 40, 50, and I'm going to buy back for 15 or 5. So what will happen is if the market moved down, think about this, the strikes will move down. And remember I put that in at like 20 pips and it said what it'd be worth if the market dropped 20 pips. And it's basically telling me I could buy it back for right about $13.50. So about 20 pips away, it's not, the market's not right on the strike right now, but it's $15. Okay? So I could sell 40.50, I could buy back for $13.50 is what it's telling me. That'd be the target for 20 pips lower. Alright? As time goes by, that'll even get easier to fill. So I could choose, which one. Do I want to go with that $13.50? Do I want to go with that $4.50? What would I choose? And again, probability is in my favor. The market doesn't have to move. So if I understand how in the monies have higher risk, but higher probability, out of the monies have lower risk, lower probability, but much higher payout, okay? At the monies remain consistent. Therefore, I can use that idea of targeting a strike for exiting a trade, targeting a strike for, maybe entering. And I also could go in and know what to have realistic price points for my exits, not choose binaries I shouldn't choose, and also go, hey, is it worth 20 pips for $3? And then the last piece to go in is other traders. Or no, sorry, we already got other traders. We talked about that. That you can put an order inside the bid ask or bid offer spread, and bring that narrower. Is implied volatility. So that's already built into time in essence. Because that's part of the premium, but also news. So you'll see trades. I've done trades like the last. I want to say it was the last. What if it was the last FOMC? I'm pretty sure it was the last FOMC. Maybe it was the one before that. No, it was the last Apple earnings release on NASDAQ. And I did the trade live on the air. I did strangles. And which means I bought out of the money above and I sold it out of the money below. And one of my favorite trades I do every year. And so definitely check out Apex around that time. Earnings season is coming up. And so I buy and I sell, and actually what happened was I became profitable on both sides at the same time without the market moving. The reason is because all this expected movement flooded into the market. Not only Nadex binaries, I don't care what you're doing. Apple options, okay, Nasdaq options, Nasdaq future options, QQQ options, like everything. Like a move's about to go boom. Okay, Apple's about to release its earnings, so this expected move. Now there's a lot of other news that comes out. Okay, so Russia, that stuff happened today. That affected things. Okay. But we also have FOMC, NFP, all that stuff. We actually list all the new stuff on our website. We have the full economic calendar, and then we also have our ideas on basically where I go through, I analyze how far do they move. I talk about them usually on my show every day. If there's a big news announcement coming up, I'll go through all the details and the specs on it. And you want to be aware of that just so you don't get hosed, because the market can move like 40, 50 pips in like a heartbeat. Okay? And so you need to know, those are things you can know they're coming. They're not surprises. Okay? And so you either need to step aside or you need to know how to trade it. And so what we do is we teach you how to trade it. And step aside. I stop doing other strategies I do, and I start, and then I trade the news. So I don't go, Russia is like now trying to say that they're not going to let, John McCain into Russia anymore. And that's a bunch of bad news coming out, and we're saying that we're going to hold their funds, and they're saying they're going to hold our funds, and we're just all going to gridlock each other, and oh wow, all this bad news is coming out, man, and it's destroying my day and my system, da 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 da. No, we hop and we throw a strangle on. So, because we understand how the market works, and okay, it's going to explode. Boom, let's take advantage of it. So, the more you understand about how they work, better of a trader you'll become. And it's not that they're super complex, okay? You don't have to make it really hard. It's just these are just little tips, okay, that will help you be a better binary trader. Like I said, that implied volatility coming in. Now, a mistake I've made. Here's one of my mistakes I made. I went in and I was doing I do a trade called expiration premium collection, okay? And I've refined it more to what we call boomerang now. It's a lot better. But I actually did a premium collection trade today on the radio. So right at the end, in 2 minutes, boom, boom, done. But you can watch it, it's live, posted on there. But I went in, and there's one day I placed a trade. It was I want to say it was 7-8 minutes, until this expiration. And I was able to buy this binary 10, 15, it was 3 or 4 strikes away. Okay, from where the indice was trading. And the NASDAQ. It's 3 or 4 strikes away for $40. I'm this is ridiculous. I am, boom, let's go, But part of me is it's just a stupid mistake. But part of me was okay, I'm going to throw 10 of these on. And, I want to throw 100 on, right? But I'm there's something that I don't get. What? Why is it? It's just too good to be true. Well, it was. Microsoft had its earnings coming out. I wasn't paying attention. I didn't have it on my list. And bam! Thing blew up in 5 seconds. Okay? So that news was coming out. That's why the implied volatility got so high. So when you see that implied volatility go way up out of nowhere and you don't know why, it's usually because news is about to happen. So things like that, you learn. And now I'm too good to be true. Wait a minute, what's on my calendar? And so now we track when are earnings coming out. Because after that trade, I'm we need to track earnings. And Esteban, he's awesome. He helps us track that. And he goes through and we pull all the information. We pull what time not just what time the earnings conference is, but what time the press release gets on the wire, because usually it's earlier. And so we'll end up posting those. I just want to show you this. it's just really helpful. It's little things that add up. It says all these earnings releases to be aware of. These impact NASDAQ and Dow. So we'll go through and say, on this day, we expect Dow Jones coming out, Cisco's going to be releasing, just to be aware of it. Like, this one's at 4:05, so you better be aware of that one because that's 15 minutes before expiration. Some of them happen 8 a.m. Not really going to impact you because there's no expiration at least till 10, but you better know it's there. Some of them don't happen until 5, but a lot of these happen like at 4 o'clock, which can really nail you if you trade the end of the day and you don't know. And they can affect FX, they can affect, all sorts of stuff. So it's just being aware of, like, why is that premium so good? Or why is it, maybe it's just horrible. And if it's horrible and you, agree that it's horrible, then you may just decide not to do a trade because there's nothing happening. The other part of implied volatility is, like, at night or day. If there's nothing really built in the market, you're going to see, like, man, this premium's really low tonight. And what I suggest is take some screenshots at certain times of night, like over and over and over again, like at the money, out of the money, in the money, like just grab a whole bunch of money on the scanner right there, and just look at it every time at a certain time of night, and just see, and you'll start realizing when is it more and when is it less. And I want to say expensive, but expensive doesn't mean expensive. Okay, expensive could mean good for the other side of the trade. All right, it also may mean more an opportunity. So they're expensive could be good and bad, but just so you start getting an idea of what is expensive and what's not expensive. So, anyways, that's my presentation. Like I said, it was over, time to expiration, strike proximity, implied volatility, other traders. I want to make sure you understood those things so that way you could incorporate that into whatever trading system you're using. And talk about in the money, at the money, out of the money, things to consider, and just some, examples. Let me go through. I know there's some questions I haven't got to yet, and I want to get to them for you. Okay? Let's see. Audio, we got you resolved. Byron, I think I got you taken care of. If not, post to let me know. But you got the idea that it's not that it's hard to get filled when you're at the money. It's just you need to understand the price you're going to get filled at. So that's the reason for the 53.47 versus like right at 50. Like, don't expect to get filled at 50 unless it goes a little past. Unless it goes a little in the money or a little out of the money, depending on what direction you're going. I think Roger, I think I got you on the buy low, sell high. Got that good? Okay. If I know where I want the price to go, how do I know where to set the option limit? That's exactly how you do it, Tony. The best way, okay, because you need 2 things, by the way. I guess 3 actually. So you're gonna have, but the 2 main things you need is you need to know. And I talked about this in the last couple of webinars, so definitely check out the archives there if you haven't had a chance yet. And it's to go in, and you need to know the expectation of movement, okay? Like, how far is a binary going to move? Not just based on the probability that's in there, but what is the actual expectation? And we have that by by 4 minutes, by hour, by 2 hour, by day, by any time frame you want. We had the expectation of movement built in. And I'll show you an example. Let's see here. Today was a pretty big move day, too. We were just blowing out some implied volatility over here. But let's see here. So NASDAQ. Basically, this is like showing you sort of by the hour. Okay, how far we expect the market to move. And then this little thing down here is showing you, like, did it hit that orange line is the expectation. But you can see the ranges, how it's coming down. And we really don't expect it to exceed that. Unless we see volume, and that's what we see right here, exceeding expectations. So volume exceeds it, we do expect it to exceed it. But if it doesn't, we don't. And that lets us know realistic targets. So not only should you have your targets based on your system, your analysis, your whatever strategy you like to use, but you should have a realistic expectation of how far it's going to move. And I can look at this, like I said, on a 30-minute, a 60-minute, a 90, whatever time frame I want. But you need to have a way to calculate whatever method you like to use. This is a method I use. And it's really simple. We're not going to go into a whole lot of detail on it, but you want to have an expectation of movement. That'll help you set your strike. So choose your strike. Make sure it's realistic within the time frame, so you have the right expirations, what I talked about last week. And then get out when it hits it. Okay? Because if you don't have those expectations by time, because that's the trickiest part, I'm pretty good at calling direction. And I'm even pretty good at calling where it's going to go to. But without an expectation, it's really hard to figure out how fast it's going to get there. And by the way, figuring out how often it's going to stay there, good luck. That's why I get out. Let's see here. Going down, boom, boom. Since this is a Nadex webinar, I thought I would ask, does Nadex endorse signals? No. Nadex does not endorse any signal provider. And in the sense, I'm not going to say, they don't endorse anybody's signals, okay? They don't endorse anyone's, Apex's or otherwise, okay? So do we endorse other signal providers? No, we don't endorse other... Actually, there are a couple guys that I know that we're actually working with, but the only people we work with are like Nadex approved educators ourselves. Okay, so just because if they've been through their vetting for education, again, that's the only thing they do is they prove education. Very clear on that. Okay, and that's why I'm here on the webinar. But yeah, only that. So I don't want to. Obviously, I can't get into stuff like that. But yeah, just make sure. I'd focus on an Nadex educator, and they have like I showed you earlier, where you can find the Nadex educators on their YouTube channel, on their webinar page, and then yeah, and make sure. The only thing is, you can come over, you can ask on our website, but just make sure that they've been around for a while. You can whois and to see how long their domains existed. They got a track record of some sort. Obviously you probably can't verify it, but at least you can see something. I'd say at least 6 months, if not longer. Make sure that they have like a unidentifiable, like a unchangeable track record, not just like a web page, but like, for example, we use Twitter because it time post stamps. Other guys do that too. It's not unique, but it's good because you can't change anything. And then just make sure they're real. Like when they send and the fill, and like you can check time and sells. Make sure the stuff's real. That because it's easy to send 40 and wait till it's down to 10 and then send the signal and say, hey, sell now. I sold at 40, but it's 10 minutes late. Are you seeing the same price when they send it? There's a lot of little tips like that I can give you, but sort of pushing a line I don't want to push. So if you have a question about signals, like, why don't you ask me over at Apex? And I don't care if it's mine or anybody else's. I'll be glad to help you out. There's some guys I think that are cool, and there's some guys I think you should avoid. So, but over on the forum or the help desk, you can ask me. The help desk is under questions help desk, and I'll be glad to help you. So, let's see. So I've not traded Nadex before. Gladstone, do you have any tutorials on how to do it? Yeah. Again, log in here at ApexInvesting.com. It's free. Go up here to education. And first place to start, just Nadex tutorials. Okay? Getting started. How to use the platform. What are the binaries? What are some ways to trade them? Also check out the scanner tutorials. Start there. And then, if you're stuck on the most... I don't care how stupid of a question you feel like it is. Just ask. Okay? I guarantee you, whatever question you're asking, I asked somebody. May have been years ago, but I asked. Okay? So, just ask. Don't spend forever trying to figure it out. Just ask us. And we'll be glad to help you. We were all new at one time. Okay? Carrie, are you saying there should always be 2 trades at one time, one open, one working? Well, first you have to have one working, and then it gets filled, or you get a live fill. Once you get one fill, then yes, you should always have a take profit going. So once you have a fill, personally, I think you should have a take profit out there right away. Okay? So, and then also you should have some risk management going on too. So that maybe, we teach a couple methods on how to do that over on Apex. Does that help, Carrie? Cool. All right, well, that was just a lot, but I hope y'all got some good tips and tricks and ways to trade Nadex out of that. And, it wasn't our usual webinar, but I like to change it up and, go into some of these are just like the little gold nuggets and just try to throw a whole bunch of them in one place for you. So, all right, well, y'all have a great evening, and I look forward to seeing y'all, a bunch of y'all on our webinar on Thursday. Okay, it's free. Just hop on our website, and you can, right here on the event calendar, you'll be able to see all the webinars that we do. All of our webinars, all of our education's always free. and be glad to help you out in any way that I can. Y'all have a good evening. Thank you.